It's Monday, June 29. Here's what today's story could mean for the Korean market.
Yeah, and we've got some massive numbers to look at today.
We really do. 84% of 51 trillion won and 519 trillion won. What do these numbers mean for your positions and sector risk today?
Because honestly, we are seeing a really massive disconnect right now,
Oh, totally. I mean, look at Korea's big five brokerages. They project a combined 3.9 trillion won in Q2 operating profit.
which is roughly 2.8 billion US dollars.
Right, exactly. And that is up 84% year on year. Yet the KRX Securities Index has actually dropped 16.77% since April.
It's just wild. It's completely decoupling from the KOSPI's 66% gain.
So it's like a casino reporting record profits, but its own stock is tanking.
That is a perfect way to look at it. I mean, it feels counterintuitive, but the market is entirely forward-looking.
Because trading volume is essentially maxed out right now, right?
Exactly. Investors are basically betting that brokerage revenues can really only go down from here. The whales have left town, so a repeat of this winning streak is, well, mathematically impossible.
Right.
And that dynamic is being driven by a truly historic capital shift.
You're talking about the ETF flows.
Yeah. For the first time in 24 years, Korea's ETF market net assets just surpassed the KOSDAQ's total market cap of 499.3 trillion won.
Wow.
They hit 519.7 trillion won, which is about 371 billion US dollars.
Wait, so are passive vehicles just vacuuming up all the small and mid-cap liquidity?
They absolutely are. And this passive takeover is exposing some really deep structural volatility in the broader market.
Like what we're seeing with those single stock leverage ETFs.
Spot on. The major culprits here are leveraged ETFs on heavyweights like Samsung Electronics and SK Hynix.
Because of how those leverage ETFs actually function under the hood.
Right. To maintain their leverage ratio, these funds have to rebalance at the end of every single day.
Mechanically, that forces them to buy more when the market is up.
And sell when the market is down. So they aren't just reacting to market momentum, they are actually artificially amplifying it.
Which totally explains the wild swings we've been seeing. I mean, we've had 8 to 10% drops just since late May.
Exactly. But you have to remember, those KOSPI swings aren't just paper losses for institutional traders.
No, they directly threaten retail investors holding ELS products ahead of the August redemption windows.
And that is the real danger right now. Equity-linked securities, or ELS products, they offer great safety margins, right? Until volatility spikes.
They basically act like a trapdoor. I mean, you get a steady yield as long as the underlying stock stays above a certain threshold.
But once it drops below that line, what we call the knock-in you, suddenly absorb massive direct losses.
The 84% brokerage profit growth alongside a 17% stock decline shows the market has priced in peak trading volume, meaning a sustained drop below 30 trillion won per day unlocks further downside in KRX securities.
You must build leveraged ETF overhang into your daily position sizing, as Samsung and SK Hynix swings risk triggering ELS knock-ins without warning.
Watch for accelerating liquidity compression in the KOSDAQ heading into the second half of the year as capital structurally rotates into passive vehicles.
With Hynix Securities expanding Sunday strategy sessions to department heads after missing this rally, how will the remaining Big Five brokerages survive when the passive ETF takeover permanently restructures market liquidity?
That's today's AI Prism Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily Reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow. Please note, KRW and USD conversions were used in today's deep dive, and this does not constitute investment advice. #KOSPI.